Hey, welcome back everyone. Thank you for joining me today. I have some very interesting news to share with you. It is yet another blow to the world economy, particularly to the stock market, and it has to do with China. So let's dive right into it. What we're going to talk about today is truly unbelievable because guess what? China lost over $100 billion in just 2 days. That is not an exaggeration. That is $100 billion. And this money simply vanished into thin air. Well, not really into thin air, but into the pockets of the government, mostly. That's how it works when the central bank intervenes. This money was invested by Chinese citizens. Now it disappeared. This money used to belong to ordinary people until the People's Bank of China stepped in and decided to take it. So what happened? What caused such a dramatic drop? Is it the housing crisis or the debt crisis? Neither one of those. This time it was something different. The reason why I find these stories so interesting is that they are extremely important because China is the second largest economy in the world. It's only second to the United States. It's the biggest trading partner for many countries. For example, it's the biggest trading partner for Canada, Australia, Germany, Japan, South Korea, Taiwan, India, and others. So when China sneezes, the rest of the world catches a cold. If you want to know more about what's going on in China, you need to follow the events closely. There are many restrictions and limitations placed on journalists who operate inside of China, so that's why it is so difficult to get reliable information unless you read the articles between the lines. If you've been following my content for a while, you already know what I'm talking about. So what happened this time? According to Bloomberg, China's massive tech sell-off tops $100 billion in 2 days. As you can see, this article was published yesterday, so let's read this together. Investors in China's internet sector suffered a loss of more than $100 billion in 2 days after the nation's securities regulator vowed to curb the influence of capital markets on the real economy. So now you understand what happened. What did they do? They took ordinary people's money? Look at the details. On Tuesday alone, the value of stocks listed on the Shenzhen Stock Exchange fell by almost 300 billion yuan, equivalent to $42 billion US. The slide came after the China Securities Regulatory Commission said late Monday it was studying measures to reduce the impact of stock price fluctuations on the real economy. So the government stepped in and took investors' money. Let's read this together. On Wednesday, shares listed on the Shanghai and Shenzhen stock exchanges tumbled by a combined 530 billion yuan, roughly $74 billion, bringing the 2-day decline to $146 billion. That is $146 billion. Look at that amount. It is unbelievable, isn't it? $146 billion. That is a lot of money. And this happened in just 2 days. What does this mean? It means that all of those companies lost billions of dollars in value. Just think about it. We become so accustomed to seeing these shocking numbers that when we see them, we don't even stop to think about what they actually mean. So let's think about it together. When you look at this number, $146 billion, keep in mind that this is not alone. This is not money that needs to be paid back. No, this is money that was invested by ordinary people into these companies. And then the government simply took it away. It is gone. You may say that there must have been some kind of a scandal or these companies were involved in some illegal activities. No. The only thing they did wrong in the eyes of the Communist Party is that they actually grew too big. The government doesn't like it when businesses grow too large. Take Alibaba as an example. Jack Ma hasn't been seen in public since October 2020. Why? Because he got too big for the government to handle. He wanted to create a financial institution that would rival banks, so the government shut him down. He literally disappeared. They took his fortune, they took his companies. It's how things work in China. If you own a business and you're growing it, your success is completely dependent on the government. So if you're doing well, chances are the government won't like it, and it will start taking your money little by little. Eventually there won't be anything left. Let me tell you, this process is completely legal. In fact, it's totally legit. But where does this money go? Of course, it goes directly into the pockets of the Communist Party. This is how they finance their growth. They call themselves a communist country, but in reality, they are far from being communist. In fact, they are a totalitarian surveillance state that uses advanced technology to control its own population. Why do you think Xi Jinping is so interested in new technologies? Why does he care so much about artificial intelligence, data collection, social credit scores? It's all about controlling the population. The government needs to know what you think, what you say, who you meet, what you do, and most importantly, what you buy. This way, they can keep tabs on you and control every aspect of your life. In addition to that, once the money is in the pockets of the Communist Party, it can be used to finance all sorts of projects, including military ones. Think about it. These companies didn't raise funds through borrowing. No. They raised funds through selling their shares to the public. To the government, this is a simple matter of taking ownership of these companies and redirecting the money where they need it. By the way, the same thing happened in 2021. China's tech giants lost over $1 trillion in value in just 1 year. $1 trillion. And this happened in just 12 months. So 2022 is not an exception. This has been happening consistently. The government has been taking hundreds of billions of dollars from ordinary people who invest into the stock market and redirecting it. To fund the government's projects, what's the end game here? What are they trying to accomplish? Well, we know that the Chinese economy is in trouble. There is a real estate crisis that is rapidly spreading throughout the entire economy. We also know that exports have slowed dramatically. Consumer spending is plummeting. Manufacturing and services sectors are contracting. The unemployment rate is skyrocketing. It reached 20% in April. Young people have no future. 8. China's youth unemployment rate hits record high. There is absolutely no hope for them. 8. More and more young people decide to leave the workforce. So the government needs to find a way to stay afloat. What better way to do that than to siphon money off from the stock market? But wait a minute. Doesn't the government realize that this will cause even more pain? Yes, they do. This is exactly what they want to accomplish. The ultimate goal here is to redirect money to state-owned enterprises. Their goal is to shift the wealth from private hands into the hands of the government. The problem is that this transfer of wealth is not based on any economic principles. This is not sustainable, and it will cause long-term damage. But let us take a step back and look at this story from the perspective of a regular citizen. Here's a perfect example of how this works. Let's say you decide to save up for retirement. You put $100 a month into a retirement account. Year after year, your account grows. Finally, the day comes when you retire and you start withdrawing the money. Only you don't have enough money because the companies in which you invested your savings went bankrupt. Your money is gone. That's exactly what happened to millions of Chinese citizens. Just think about it. If you have been saving for decades and putting money into the stock market, into the companies that were based in China, in China's tech sector, for example. And then one day you wake up and you find out that all of your investments turned to dust, that your money vanished overnight. What would you do? Would you continue investing in the Chinese market? Absolutely not. You would want to get out, wouldn't you? But guess what? The government won't allow you to do that. They will make sure that you will not be able to sell your shares. This is how they've been operating for years. There is no rule of law in a communist country. There are no property rights. Everything belongs to the government. If the government says that you own something, you own it. And if the government says that you don't own it anymore, then you don't own it anymore. It's gone. You don't have any rights. You don't have any legal recourse. This is why China is the most dangerous place in the world to do business. And that is why China lost $100 billion in just 48 hours. The government took ordinary people's money. This is how the Chinese economy works. Thank you for watching this video. If you enjoyed it, if you learned something new from it, make sure to give it a like. If you haven't done it yet, consider subscribing. Also, don't forget to check out my newsletter, and I will see you in my next one tomorrow. Bye for now.